All right, let's just get right into it. Today, we're going to talk about something that sounds, well, a little crazy. We're going to talk about the psychology of actually feeling good, maybe even excited, when the stock market is a sea of red.
So let me just ask you this straight up. When you look at your portfolio and everything is down, what's that gut reaction? Is it that sinking feeling in your stomach? Or is it a little jolt of adrenaline? Does a falling market secretly make you happy? If it does, don't worry, you're not crazy. You might have just reached what some people call investment nirvana.
And this really breaks it down perfectly. There are basically two camps. You've got the herd, they see red, they panic, and their first instinct is to sell, to get out. But then there's this other mindset, this nirvana state. These folks see red and they feel a thrill. They see opportunity. So today, we're going to unpack what makes that second mindset so incredibly powerful. Okay, so the very first step to getting there is to completely flip how you think about buying stocks. And it all comes down to something I like to call the grocery store paradox. Just think about it for a second. If your favorite thing in the world, a great cut of steak, that pair of sneakers you've been eyeing, whatever it is, if it suddenly went on sale for 30% off, you'd be ecstatic, right? You'd probably be telling all your friends about it, rushing to the store before they're all gone. So here's the paradox. Why on earth do we do the exact opposite when it comes to investing? When a fantastic, high-quality company, a company you love, goes on a 30% off sale, what do most people do? They run for the exits. We saw it happen in the 2020 flash crash. The herd was panic selling at the bottom just to stop the bleeding, while a handful of people saw it for what it was, a once-in-a-decade clearance sale. And this Warren Buffett quote just gets to the absolute heart of the matter. That thrill, that excitement you feel in a red market, it comes from knowing that the price has temporarily disconnected from the value. You know you're getting something amazing for cheap. And that feeling, that's the high.
So how do we actually get our brains to do this? Well, it means we have to do a little bit of hacking on a really deep-seated part of our psychology. We have to take that natural fear of loss and actually turn it into our greatest weapon.
Now, the big thing we're fighting here is something called loss aversion. It's this core idea from behavioral economics, and it basically proves that the pain you feel from losing something is about twice as strong as the pleasure you feel from an equal gain. It's what makes seeing red in your portfolio feel physically painful. But you can rewire it. And this is where that rewiring really shows up. Think about your cash, your dry powder. When the market is green and going up, that cash on the sidelines feels awful, right? It feels like a missed opportunity. It's pure FOMO. But in a red market, that same cash is suddenly transformed. It feels like a loaded weapon, just waiting to be deployed for maximum impact. It goes from being a source of regret to a source of power. Which leads us right to this brilliant piece of wisdom from Charlie Munger. By learning to love red days and having your cash ready, you're basically switching sides. You stop being the impatient person who gives away their assets in a panic, and you become the patient person who's standing right there, ready to scoop them up at a huge discount. Okay, so let's talk about how this actually builds wealth. Because this mindset isn't just about feeling good, it's about the real mechanics of long-term growth. It's all about building your foundation when fear is at its absolute peak. I want you to think about it like this. A green day? That's just business as usual. It's what you expect to happen over the long run. But a red day, that breaks the pattern. It's a disruption. And inside that disruption, that's where the real opportunity is hiding. And the simple table just lays it out perfectly. Let's say you invest $1,000 every month. Look at scenario A, the nice, steady green market. Your money buys you a little bit less each month. But now look at scenario B. A big, scary red market hits in month 2, and your same $1,000 suddenly buys you double the shares. Your total share count, which is the true engine of your wealth, it just explodes. Your brain starts to recognize this is how you get ahead.
Ane, if this way of thinking is starting to click for you, just know you're in some really, really good company. This isn't some weird new idea. The most legendary investors in history, they didn't just put up with red markets, they actively prayed for them.
I mean, just look at this. It's incredible how they all thought the same way. Shelby Davis said crashes are when the little guy can actually get ahead. John Templeton's famous line was that the point of maximum pessimism is the best time to buy. And of course, you've got Baron Rothschild's legendary advice to buy when there's blood in the streets. For all of them, fear was a giant flashing buy sign, not a stop sign. And this quote from Sir John Templeton really explains why a green, euphoric, everyone's getting rich kind of market can actually feel, well, boring or even a little dangerous. That euphoria, that's the end of the big opportunity. The real excitement, the birth of the next great bull run, that happens way down in the pessimism, down in the red. So, this brings us to the final piece of the puzzle, the one question that really ties this all together. Who are you right now as an investor? The answer is all about understanding if you're a net buyer, and then just letting your emotions line up with that reality. And this analogy it's perfect. If you're still in the phase of your life where you're accumulating assets, buying, not selling, then hating a red market is like being a professional baker who gets angry when the price of flour goes down. Flour is your key ingredient. It makes no sense. You should be celebrating.
So ultimately, it's this simple. If you feel that thrill on a red day, it means you're a net buyer of assets. You're still building your wealth. Your emotions aren't wrong. They are perfectly, rationally, beautifully aligned with your actual economic situation. You are a buyer, plain and simple.
And that leaves us with one final thought. The next time the market turns ugly and you can feel the panic in the air, you have to ask yourself, am I running for the exit with everyone else? Or am I grabbing my shopping cart for the sale of a lifetime?